Good afternoon, everyone. Welcome to Successfully Securing Business Loans, a webinar jointly organized by Maybank Singapore and Singapore Indian Chamber of Commerce and Industry. Just to share a few house rules, all participants' mics will be muted and videos will be switched off to avoid any technical disruptions. If you have any queries, please type your questions by clicking the Q&A button below on your screen. Kindly take note this webinar session is recorded for archiving and training purposes. This is the program schedule of today's session. So Mr. Parthiban will be starting with the opening address, followed by Ms. Elina Yeo. She'll be sharing about the 5 C's of credits, common reasons why loans get rejected, financing options, and then they'll be followed by the Q&A session, and Mr. Johnson Paul will be ending with the closing remarks. So for the opening address, I would like to introduce Mr. Parthiban. He's a board director at Singapore Indian Chamber of Commerce and Industry. He's also the managing director of Ishtara Jewellery Private Limited, Luvinous Jewellery Private Limited, Luvinous Jewellery Hong Kong, and Mishana Media Private Limited. Mr. Parthiban, please.
Good afternoon, everyone. It is my pleasure to join you here today for the live webinar session, Successfully Securing Business Loans, jointly organized by Maybank Singapore and Singapore Indian Chamber of Commerce and Industry, SICCI. Before I proceed further, I would like to thank our chairman, Dr. T. Chandru, board directors, and the SICCI secretariat team who contributed their valuable time and effort towards this webinar. I would also like to thank our esteemed speaker, Ms. Elina Yeo, Head of Business Development of SME Banking at Maybank Singapore. SICCI strives to provide its members with insight, connections, and services that will give companies a competitive edge in the global market. We offer an array of business support services, including trade matching, business advisory, networking sessions, seminars, and training to serve as a champion of members' interests. Our aim is to function as a gateway of opportunities for Indian businesses in Singapore, helping both homegrown and international companies realize their full potential. In the month of May 2020, SICCI established a COVID-19 task force to assess the needs of SMEs and ascertain the best ways to help them to ride through the challenges during the COVID-19 pandemic. As part of the various initiatives of the task force, we did a survey on approximately 2,000 businesses island-wide. Many of the SMEs responded that managing cash flow and depleting financial reserves were one of their biggest challenges. Many of them further shared with us that they had difficulties securing bank loans. Our government has been extremely generous and forthcoming with several financial support packages for businesses affected during this COVID period. It is imperative that affected businesses make use of these support packages. The purpose of this webinar is to give SMEs a better understanding from a bank's perspective on the various criteria for processing a favorable bank loan. This webinar will also share information on why applications get rejected and how businesses can better themselves to put up loan applications in future. With more businesses having resumed operations in phase 2, it is crucial to understand and leverage the slew of measures from the government to help businesses ride through COVID-19. Companies must stand ready to ride the wave of change to new COVID norms to enhance our adaptability and competitiveness in the global markets. On that note, I'm pleased to invite our main speaker, Ms. Elina Yeo, to share her valuable insights on this important topic. Ms. Elina is the Head of Business Development for SME Banking in Maybank. She manages customer relations with SMEs, overseeing teams which provide cash management, trade finance, commercial property, and working capital solutions to businesses in Singapore. Ms. Elina has over 22 years of experience in the banking sector and was the cluster head of SME Banking at Maybank before being appointed to her current role in 2018. So please join me in welcoming Ms. Elina Yeo. I would like to wish everyone a fruitful webinar session. Thank you very much. Ms. Elina?
Hi, thank you, Mr. Parthiban. Firstly, thank you, SICCIs, for giving me this opportunity to be here this afternoon. And also good afternoon to all ladies and gentlemen out there. To all the participants as well as the members of SICCI, thank you for sharing the next hour with me and spending your hours with me for the next 45 minutes to an hour. Okay, so all right. In the next hour, I will basically cover the 5 C's of credits, okay, which is the secrets to a successful loans applications, which what Mr. Parthiban has mentioned, all right, and also be touching on the financing options that SMEs can consider, and also some of the digitalizations that could actually benefit your business. So Maybank has been around for the past 60 years, and definitely we are, as a locally incorporated bank in Singapore itself, we are definitely here to fight this pandemic with all our nation's SMEs taugays, right? During my presentations, if you do have any questions, all right, that at the bottom of the screen, there's this Q&A icon. You may type in your questions that you have, and my colleagues, Cheryl and Jeff, one of my team heads, will be answering the questions from there. Or otherwise, at the end of the seminar, there's a Q&A sessions. You could also ask me any question if you do have then, okay? So everyone's, we all know that there's a 5 C's in Singapore, 5 C's of Singapore, all right? In banking sector-wise, we also have the 5 C's of credit, okay? The 5 C's of credits consists of character, the capital, the capacity, the conditions, and the collateral. I will go into explaining each of this in details in the next slides. Okay, character. So it's basically the history and the experience. Okay, so where do we get this information from? So basically, we look at the credit bureau, the report from the credit bureau itself, and there are 3 characters that we actually focus very much attention to, which is the A and Y. Okay, if you all have seen your own credit bureau report, you realize that at every bank, your scoring, right, there will be an A and Y score. Okay, this A, what does it stand for? It basically stands for your cycle summary. A summary meaning that it's a prompt repayment summary. So it's month by month, all right? And N, which is meaning no cash advances, and Y meaning yes to full repayment. So when
Right, Elina, before you continue on, could we have you to share the screen first?
Oh, it's not shared, sorry. I thought I shared.
No problem.
Okay, hold on. What happened? I thought I shared my screen. Okay. Can you see now?
Yes, that's right, Elina. Thank you so much.
Sorry. So, sorry about it. So basically what happened is this is the 5 C's of credit, which I mentioned briefly, and I'm into the first character. The first C, which is character. All right. So as I was saying, the main thing that we look at is the A and Y, these three main alphabet in all your credit bureau score. All right. And from this report itself, it shows the willingness and the abilities of individuals to pay your installment when it's due. Okay, well, you may argue that, oh, this is a personal. The credit bureau is a personal report, yes, but this one gave the bank an indications of a person's character through its repayment the patterns. Okay, so all banks rely on this credit bureau report, and it means that when you apply for any loan applications, all the banks will, when you sign the consent form, that means the application form itself, you actually allows the bank to buy your credit bureau. So when every banks or every organizations buy your credit bureau, right, it's actually, the banks will know, okay? So when you have too frequent attempt of buying your credit bureau, it's also a sign. It could be a sign, I'm not saying that it's 100% that, it could be a sign that are you in needs of frequent financing and you are searching for many banks to apply for it. Okay. Well, it's not say that you can't do that. You can, but what happened is if let's say over a period of 3 months and we have seen you searching or organizations searching on your credit bureau for the past, let's say more than 10 times, for example, and none of them has given an applications. So the banks, the next party that is searching and looking at it will also be thinking, is there anything wrong? Why is it that the past 9 organizations, no financing has been obtained? All right. So yeah, I do know of customers that says that, oh, I just like to see, my own credit score, whether is it good. Yeah, but I don't think that we should do it very frequently. Do it every once a year. I think that's pretty all right. Okay. And the other reports that we look at, right, when we look at character, is also your ACRA. So that is very pertaining to your business. So from ACRA, we will know the key man experience, whether how many years you have been in the relevant business, or maybe there's a change in the company's name and this business could be a very new setup, but your experience are all the while in the same related business. So this will be another things that we look at in terms of character. Okay, the next C, which is the capital, is the commitments to business. So we look at how committed an individual is to the setup of the business. We look at your PUC, your tangible net worth, your ability to overcome the business volatility and operating losses, as well as the capital leakage of the company. Okay. The next C, the capacity, is the cash flow for repayment, the serviceability of your loans. So we will take a look at your bank account. Okay, all banks will ask for your past 6 months bank statements. So from here, we will see the cash flow. We will see how you are able to service the installment that you are taking up. And then also we will at times also request for invoice contracts, especially during this period, during COVID, during circuit breaker itself, many banks accounts are not really, you don't have much transaction. So yeah, then we will want to see whether do you have any contract, any invoice that can justify your cash flow that's coming in. Okay, your ability to service the installment if the facility is being granted to you. Okay, the next condition. Okay, condition itself will be basically the market environment, the situations, the interest rate, the industry and the segment. Right now, actually, if you ask me, COVID has created the conditions for SMEs to actually, take a look at whether does your business seriously want to go into any financing at this moment. Okay, the governments could also, because the governments are coming in to give a certain level of risk coverage. That means to say, with the relief measures, the government is actually covering 90% of the risk. Right? So the government provide the 2 C's at this junction. They provide the collateral in one way or another, not 100% collateral, but they provide collateral in one way or another. And then the environments now is the conditions that is calling for financing needs. So as in the bank know that currently, yes, we know why is there a need for the financing, the conditions is there. Okay, so collateral is the one that gives the assurance to the bank in the event of a default. All right, it gives the bank the kind of assurance as to whether, where are we going to get our payment. Will it be an individual providing the assurance? That means a personal banker, or personal guarantee, or is it an asset that will be providing the collateral? Okay, so regardless of which bank you apply your applications, okay, they may not classify under the 5 C's of credit, all right, but it's basically, these are the things that we look at. Okay, and then what happened is it went through more or less is similar, and then it will go through more or less the bank the system itself, whereby it will dictate your facility structure, the pricing, the quantum, and the tenure. So an individual can tell me that, I passed the 5 C's, I have collateral for the bank, I have conditions for the bank, I have good capacities, and then my capital is there, and I have no issues with my credit bureau report. But the bank are telling me my application is still not approved. Okay, then other than these 5 C's that the bank look at, the other things that is a requirement of the respective loans. Okay, so like for example, for the current normal standard working capital loans, right? Different banks also have different requirement in terms of the turnover. So this is not inside the C anymore, but it's the turnover that the bank will look at. For example, certain banks will say that, oh, my minimum turnover for an organization is 300,000. My minimum is 500. My minimum is 750. There are also certain organization minimum is 1 million turnover. So if let's say, you without knowing what is the requirement for it, and then you went in to apply for it, okay, then of course the reply that's come back, say for example, yours is a business of about 450 turnover. So you went into a bank that says, I need 500 to be the minimum. So your rejections, the applications were likely to be rejected. So the other thing is the bank statements. We also look at bank statements of the company, as in to say that in terms of the monthly installment, all banks will usually require us to have several months of turnover, several months of installments made available. For example, if your installment is 2,000 a month, then we will relatively require your bank statements to have maybe about 10,000 and above. Yeah. So these are things which is not in the 5C, but it's also things that the bankers will look at. Okay, positive net worth is another one that the bank look at. We do not need 2 years of positive net worth, but of the 2 years of financial that we are looking at, most banks will require the last year or one of the year to be of a positive net worth and profit making. Okay, then the number of years of setup. Some banks have minimum setup of 2 years, some are 6 months, some are 1 year, some are 3 years. So again, if you go into a bank that is 3 years, then you realize that why is it that my applications always get rejected? Okay. So yeah, and then also just now when I mentioned about capital, some organizations are okay with PUC of $1, some are not. Yeah. So these are also some of the reasons as to why your applications didn't go through. So hopefully, with these sessions itself, with some highlights of what are the things that the bank look into, and also, when you have gotten, like say, one rejection itself, then you will roughly find out what is the reasons for the rejection. Say for example, you went into an organizations that minimum setup is minimum turnover is 500,000, and while yours is 350 or so, then don't be discouraged. You can try another one which is in the range of 300 to 350. Yeah. So, but if let's say, the banks are all telling you, no, minimum setup, minimum turnover now is 500, let's say, for example, then you know that the reason is not because you don't qualify. The reason is basically not because your business has any issue or you yourself have any issue, but because you don't hit the minimum requirement. Then that angle of the loans may not be what you should be working on. There will be other things that for you to get your financing. Okay. Because I do know of like some setup, for example, there are only like 6 months or 9 months setup, and it's very, very tough to get any financings currently. So not just currently, in the past also very difficult for those 6 to 9 months setup business to get financing. So what do is they don't go for financing. So no point you keep trying and then you get very upset and demoralized over it, but rather you go for grants that the governments are providing, grants that enterprise can help you with. Okay, not the facility, not the financing from the bank. Okay. So hopefully with that, right, it will make it easier for you all to apply your applications, because technically, right, in all banks, we are not supposed to disclose the reasons as to the rejections of the loans of the facility. So that's why I say that this is really the secret of getting your loans approved and getting it through. Okay. So my next portion, so these are the reasons and the 5 C's lah. And the next one that I'm covering, the portions that I'll be covering will be based on financing options that's available, and then also the relief measures that are available based on the current pandemic. Okay, so the government support for businesses currently in the period of this uncertainty, right? Cash flow will be the main king. All right, because I think every business owner should set aside cash flow and liquidity just in case of emergency. All right. So the current pandemic created the conditions, like I mentioned, and the collateral is provided by the government in some way. All right. And so it's really timely to consider, even if you do not need the financing, as in the cash now, you should consider taking it up as we do not know how long this situation will also drag. All right. During the solidarity budget itself, right, the two really solid funding that the government come up with will be the enhanced working capital loans and the temporarily bridging loans. So this two is quite pretty simple to understand. Okay, the enhanced working capital loans is something that we are quite familiar with. It has already been in the market for a while. It was known as the working capital loans. All right, and all the while we are aware that this is a 300,000 loans, and the government basically provides certain levels of risk coverage for this kind of financing, and it has increased from the 300,000s to 600,000s to the current 1 million. So at the point in time when it was at 300,000, right, if those are members that have taken up this facility before, you'll be aware that this loan is in a range, interest rate range of about 7 to 8%. With the pandemic and everything, right, the interest rate has really dropped for this one. It has gone down from the 7 to 8% to now about 3 to 3.5%. Okay. Then the temporarily bridging loans, okay, as the name suggests, is really temporarily, as in it will end on the 31st of March 2021. Okay, so we still have about 6 more months for this scheme to be available. Do not know whether at this junctions, right, whether will there be any extension. Yeah, should there be, we also do not know whether what will be the interest rate for the temporarily bridging loan then. So the current temporarily bridging loan interest rate is in the range of about 2.75 to about 3%. So you realize that, from the 8% interest rate to the 3.5% interest rate to the current less than 3% interest rate. This is what the relief template, the relief measures that the government has come up with to assist the SMEs in Singapore itself. Okay, so there are many kind of relief supports. So this is the working capital, and then the temporarily bridging loans. The temporarily bridging loans, as I said, right, why is it, I say that it's, these two are very solid, because this one itself, you can take up to a maximum of 5 million facility. For the loans itself, right, it can be as high as 5 million. And then again, this loan, there's no collateral required. It's basically a clean loans per se. Clean loans meaning you don't have to give the bank any form of security, only the personal guarantee. Okay, so the directors, the key man of the company, will have to come in as a personal guarantor for the said two loans. All right, and for the working capital loan as well as the temporarily bridging loans, right, you realize that there's actually a deferment of principal for 1 year if really necessarily for the company to take it up. Okay, meaning to say you don't have to pay me the principal during this period of the 1 year. You only have to pay me the interest. So if you have a loan of about $1 million, say, and interest rate, say, in simple calculation, let's just say interest 3%. So $3,000 is the interest that you have to pay every month. 1 million, you pay me 3,000. All right. And then what happened now is you go for deferment of your principal, meaning to say, instead of paying 18,000 principal and interest every month for 1 million facility, during this period of the 1 year, you only pay to the bank 3,000 towards the interest. All right. So to qualify for this temporarily bridging loans and the working capital loans, right, basically you just have to be a Singapore registered company, 30% local shareholding. All right, and the directors can be Singaporean or SPR. That's pretty all right. Okay. Then other than the working capital loans, working capital financing, right, we also have the loans insurance scheme. Okay, so the loan insurance scheme is very much pertaining to trade facility. So for those, trade facility may not be something that everyone is familiar with. So in simple words, it's basically trade financing is basically just an instrument, right, whereby the company, the business, the SME, make use of instruments such as the trust receipts, invoice financing, letter of credit, all these kind of instruments, right, to obtain the goods and the goods that you are actually getting. It's basically to aid in your supply chain so that you can get in your goods and then after that sell it. In layman and simple words, basically the banks help you to pay for your goods. You sell your goods, get your money, and then you pay the bank back. Okay. So this LIS, right, is actually a scheme whereby it's actually underwritten by insurer, a consortium of insurer. So this insurer, right, they cover 75% of the risk. And what the consumer, like the SMEs owners, right, what you'll do is basically you pay a premium to get this insurance. Okay, and then you have the trade facility. So the bank will grant you the trade facility based on this insurance that you have gotten. The insurance premium for it used to be maybe in the range of about 2% to 4%. All right. Then with the COVID, they came in with a 50% discount. So the premium dropped to about 1.25 to 1.9%. That's the premium. And the government come in to provide the relief by giving 80% subsidies on the premium. So with the subsidies from the government, right, the premium drops to a range of about 0.5 to 0.64%. Okay, so if let's say the insurer, because it has to go through the insurers to underwrite whether they want to grant you this trade financing. So if let's say the insurer decline your so-called your trade facility, right, that means they are not inclined to support. Not to worry, because we will submit the applications to Enterprise Singapore for trade loans. So with these trade loans itself, right, well, this is basically because of COVID-19, they come in to step in and help out. Okay, the governments will come in, the so-called government, in a sense, Enterprise Singapore comes in to give a 90% coverage of the facility to the bank. So that gave the bank the so-called the ability to grant you the trade facility again. Okay, so with this trade loans, right, okay, you will be able to obtain your trade financing, your trade facilities, and move on with your trade, because trade still needs to move despite this, because there are a lot of essentials goods that's ongoing in the market itself. So again, to qualify for this, so you must be a local SMEs, okay, 30% local shareholding, Singaporeans or Singapore PR, that's pretty all right. So that this portions of this two scheme, right, is basically pertaining to trade customers. Okay, the other one, okay, they're not just in terms of the financing itself. They offer financing to you in terms of the premium. They also help to make sure that you can get the facility. So what the bank over here do is we will extend, all right, the payment period. Say for example, your trade is on 120 days, but due to COVID, everything is pushed back. All right, so you can, depending on the type of trade facility that you have, okay, you can actually ask for extension of your payments that's due. Because we also know that it's actually, this pandemic is worldwide, so everywhere is affected. Yeah. So if you have encountered any of this issue, right, approach your bank, which is currently offering you all this facility. They will be able to see, how they can, what kind of extension, what kind of relief we can work on to assist you. So then, other than the trade kind of relief, we also have relief for secured loans, in the sense like your commercial property loans and the direct hire purchase loans. That means your car loans. Okay, so what happened is you can ask for deferment. When it comes to loans, we ask for deferment. When it comes to trade, for relief, you ask for extension. Yeah. So you realize that many of the loans now are able to go for holidays. All right, we can't go for holidays lah. Okay, but many of our loans, if you need the holiday period, do approach your banks, okay, to get the holidays for these loans. It could be on principal, and interest. So depending on different banks. For the working capital loans, it's very much on the principal. For the commercial property and hire purchase, right, if your facility is with Maybank, okay, this relief, holiday, right, you must go back to your bank, to your existing bank. So for the direct hire purchase and commercial industry property loans, right, over at Maybank, we actually give principal and interest holiday, okay, for a period. For example, commercial property loans one will be until the end of the year, and for direct HP will be for 6 months. Okay. Okay, so basically, right, my advice for trade facility, right, is a benefit. It's beneficial for the long run. Okay, because basically, right, it's revolving. So if you have a trade facility of 1 million, and then after that, you use 500,000, you know that, okay, if you do have another bill that's coming in, you can make use of it again. And once it's being paid off, that means you paid all, you collected your money, you paid me back my 500,000. Yep, your line is back to 1 million. Okay, but if you don't make use of trade, if you don't use trade, if you don't do import exports kind of things, all right, so for cash flow needs, then you go for the temporary bridging loan first. Okay, for now you go for the temporary bridging loan. If you finish using the temporary bridging loan, which is a limit of 5 million, if you finish using it up, then you go for the working capital loans, because the enhanced working capital loans interest rate is relatively a little bit higher. And if you do have assets, okay, or you are looking around for assets, it's actually very timely now to also take a look at your assets or what you are looking for. Because right now the interest rate environment is very low. In terms of the interest itself, it's very low. Okay, so for be it new purchase or refinancing, let me just quote you the range of interest rate. Right now, the markets are offering things like variable rate, SIBOR rate, fixed rate. And the lowest for the interest rate right now, it could be as low as 1.3% to maybe the high is only at 1.85%. Yeah. So depending on the package that you're going for, it's in the range of 1.3 to 1.85, which I think is actually, timely to take a look at your commercial property if you have, and whether do you want to consider a refinancing, or if you are looking out for property, it's also timely to take a look at whether do you want to source for your own. Okay, current market environment, right, also see many of the SMEs going into digitalizations. As we are aware, right, during the circuit breaker period, many of your maybe many of your accountants, your admins, your HR personnel may not be able to go into office because their jobs is not so-called essentials that they may not be able to step into the office, or maybe your business itself are not able to function and operate from the office itself. You have to work from home, and then that's where all the SMEs realize that a lot of informations I don't have because the system is not digitalized yet. Okay, and so over at Maybank itself, we actually work with partners, approved vendors, okay, to actually come up with packages, right, whereby we are actually giving 18 months free, so-called, for SMEs to actually try out all these digitalizations. As I mentioned during the 5 C's, right, things that are very important to be like your finance, your financial, your every year financial. So if you have 3 months that nobody touch your finance, nobody do your accounting, then you realize that wow, when things starts to move back to phase 2, which is right now, you have a lot of backlog to be complete. So if you have it under digitalizations, like for example accounting, your day in day out transactions can all be clocked under the system. Okay, it is no longer a manual process. So we have packages whereby in terms of digitalizations, you can look into accounting, HR management system and payroll, digital marketing, digital transaction, and cyber security. So yeah, if you have yet to take up any of these, or your system, your company software and your accounting system or your HR system is not even in digitalization mode yet, it's still very manual process, make use of the current so-called promotion packages that we have to try out for the next 18 months, and you realize that it could ease quite a fair bit of your job. Okay, finally, my last slide, which is on pay now. Okay, if you are in retail business, you realize that during circuit breaker period, every mode of payment, right, because it's really very digitalizations. So I would suggest, I would recommend that SMEs sign up for Pay Now, sign up for digitalizations. For right now, Maybank, from now till the end of the year, fee waiver for all Pay Now incoming and outgoing transaction with Maybank account, and also you will receive 5 free Pay Now SG QR label. Okay. Well, that's the end of it. So these are the contact numbers of my team heads. If you want, you can do a screenshot of it. Okay, I hope that this session today is useful to your business development and planning. And over at Maybank itself, we don't just offer loans. We have the wide range of product and services that SMEs can actually make use of, just like digitalizations, pay now services and stuff like that, whereby it will actually ease the flow of your day-to-day operations. Okay.
Okay, so I think now we have come to the Q&A session. So please feel free to type in your questions over at the Q&A, and Elina can answer them. But in the meantime, I think to just kickstart on certain things, right? I think there were some questions. With regards to for example, do all directors have to be checked for credit? And also, does it mean that if touch wood, if anything happens, they will be liable? And what could possibly be for them, if in the case that it goes underwater, or if in the case that there is an NPL, which means that they do not pay their loans or service their loans?
Okay, do all characters have to go through credit? Yes, we will actually run through credit bureau for all key men and all directors. Yeah, and I see this question here, which is personal guarantee is very risky. Personal guarantee is usually provided for your own business. So as a key man, as the key man of the company, right? I think it's natural that you stand as a PG for your company. Yeah.
Yeah, I think it's only fair because we don't want to get provide give loans in any way if the directors and all that is not committed as well. Am I right, Elina?
Yes.
Yes, that's right.
Okay.
So
I just see one question that comes in. For a small company, which is better, working capital loans or temporarily bridging loan, and what is the processing times approximately? So basically, if you ask me, like I mentioned, I would think that for now, go for the temporarily bridging loan because it's really temporarily. Okay, the governments can call an end to that, and currently the interest rate for that is also cheaper. Okay, so go for the temporarily bridging loan first. And then the processing times now has really not as horrible as during the start of it. During that time, I think most banks are telling you 1 to 2 months. Now maybe we should be able, your fund could be released in 1 to 2 weeks.
Okay, great. Elina, there's another question. If there's a collateral, do you still require a personal guarantee?
Yes. Yes. Even for commercial property loans, the collateral, yes, we take in the collateral, but the key man being the key man of the company, the director being the key man of the company, will still comes in as a PG. I think this is a standard for all banks. We won't say it's double guarantee because in the event that anything happens, right, we will look at the asset first. We will take it from the assets first rather than from the personal guarantor.
Okay, noted. And another question. So I think this member is probably in the construction industry.
Yeah.
So apparently banks have reservations to lend to businesses in construction industry as they're telling industry vulnerable, and even though there's a co-sharing of 90% risk by government for TPL, right? So how can they overcome this issue?
Actually, for construction industry over at Maybank itself, we won't say that we have reservations. Okay, we basically look at what are the projects that the company have. Okay, and if let's say they have an incoming project is coming in, right? We are still providing the financing. Yes, we know that the government is giving a 90% so-called risk coverage against it, but in all the assessment, right, we still have to assess whether, is this a business that's doable? Because currently, right, with 90%, we also worried that there are cases whereby business are not actually, it's actually dormant. And now because of they wanted to get the cheap financing, people are rushing in to get the loans. Yeah. So we have to check that if the business is still running, even if it's a construction industry, okay, we will see whether you have a contract that's coming in, you have project works that is work in progress. Yeah. So we may be asking for a little bit more things than the normal other industry. Like for example, we may want to take a look at the debtor aging list. We take a look at whether who are your partners with, and any chance that if they default in payment, it will also impact you. So we are still providing the loans. Yes, we give.
Elina, can I ask you a question? Sorry, Cheryl. Can you hear me, Elina?
Hi, Ken.
Yeah. Because a lot of startups have been asking us how to get funding, because startups don't have a proper track record. They may not be. They may not be having financials or accounts for 1 year or 2 years. I don't know. So, is there anything that Maybank is providing for startups? Any kind of funding that they can avail from whatever finance schemes you have?
Currently, I don't have any grant. Sorry. Yeah, we actually wanted to launch a grant.
Go ahead. You were breaking up.
So I'm saying that for startup, right, for Maybank, over at Maybank itself, I don't have any loans for startup business. In fact, I don't think any of the local bank has any loans for startup, as in per startup lah. So what for startup, usually they go for enterprise kind of grants. Okay, over at Maybank itself, we also wanted to come up with the grants, which we were supposed to launch it this year, but because of the COVID, right, the grants was not able to move forward like this plan. So yes, next year itself, when everything become more stabilizes, yes, we definitely want to start up with some helps for startup. Yeah, so at this junction, I don't have any, and sad to say, most of the local bank don't have much for startup. Yeah, so then somebody also asked this question on startup loans, and do I have any? Yeah. So I also answered her question, Kavita, right? Kavita has this question on startup. Yeah.
Yeah, but that being said also, Elina, how about if, for example, the key man has relevant experience previously, and then they came up to do like something similar, how's it going to be like then?
For that, we don't club them under startup. We will make use of the expertise. That's why I say from Accra, we will be able to see whether, where the experience of this key man is. It may be new in this is a new startup. So ABC company is new for, say, 1 year. But prior to my ABC setup, I have XYZ, which is for 4 years. And it's the same kind of business, same kind of nature of a job. Then, yes, I will make use of the experience from the other side to justify that this client is not really a startup. He has the expertise and experience. Yeah.
Elina, one more question. We have been getting, views from SMEs who have actually put up applications for the TBL, even though our government is giving a collateral of 90%. Then again, the loans are being rejected. So they're asking us why, because the banks are already covering 90%. And they are quite reasonably good companies. Maybe during the COVID-19 period, of course, all the businesses have been affected since, I would say, January 2020. So will that be taken into account? The period from January till date, or, of course, their management report will not be so good, because a lot of businesses have been affected. So will this TBL consideration for approval, will this duration of time where the company's management analysis will not be so good, will that be taken into account for approving loans?
The management account for this year itself, right, have yet to be really, as in for us to look into it. Right now, what really impact the SMEs is the bank statements, because immediate we see is the last 6 month bank statements. So if let's say the bank statements for the last 6 months is not in very good shape, then I would say that it will really much depend on your personal net worth. Do you have anything in your personal net worth for us to justify your serviceability? Okay, and if you do have any of the invoices or contracts that are upcoming, because we are already back to phase 2. During the during the COVID circuit breaker period, that was really the tough one, because you seriously do not know how soon your business can start to run and function. But right now we are in phase 2. We know that business has started to run. Even in construction industry, there are already projects ongoing, and many projects have actually starts running. Okay, so with that, right, if you're able to substantiate your slow transactions for the 6 months, or no transactions for the past 3-4 months, yeah, show us the bank account, show us the contracts and invoices, that will still be able to get you some financing. Yeah.
But what about companies that don't have any business, or the business has dropped by nearly about 80%? Many companies, many businesses, the business has dropped, and the bank statements, cash flows would definitely have been affected. How do you assess this? Like many companies are facing this, right?
Yeah.
So how do you do the credit assessment
for example, the travel industry, there's no business. We also know. So I'm afraid this group is seriously a group that not many of the banks they're not take the risk, although the government.
Can the TBL help them? I mean, the TBL loan, can it help because the government is helping with the cash flow?
We know the government came out with 90% collateral, 90% by the government itself. But the governments leave the requirement of the bank, of the applications, right? There's still requirements of the applications to the bank. So all banks will still have to follow the requirements, and that's what makes it tough. That's why the travel industry, for example, the tourist industry, the travel industry, these are the two main impact one. They are the hotel industry.
Hotels,
yeah. But hotel is starting to pick back up. Yeah, as in we are trying to make it more possible for them. But with tourist industry is the one, because no tourists coming in. So this is the tough part for them. So yes, we do encounter, if they don't have any relationship, right, it's very, very tough. If they do have some relationship, you realize that their existing banker would still, because of the number of years of relationship, the existing bankers will still provide some helps in one way or another. Yeah, through temporarily bridging loan. The other thing is, that's why I say it's timely now. If don't wait until you really, really, really need it. It's timely now for SMEs to seriously get on the relationship. Because without a relationship, that's very difficult. When situation turn bad, like during the COVID, nobody knows what is your repayment record. Nobody knows your repayment ability. Nobody knows how your business function. So during good time, yes, you may think that I don't need money, why I pay bank interest. But make use of this cheaper interest one, get some relationship ongoing in terms of for your business. So that the bank can see your performance, your track record of repayment, so that we can see everything from credit bureau. A clean credit bureau doesn't mean that it's good credit bureau. Yeah. So that's a part about credit bureau on character itself. Just now I should also mention that portion. If you have a very clean credit bureau, it also I'm not able to judge your character, so to say.
Okay, so we have some more questions, but I think we'll just pick a few because in view of time. So there's this other member. He said they had a CIP loan where they were paying very time. Not a CIP loan, but rather they gear up from their commercial industrial property loan. They have been paying timely. There's no default. So they have tried applying for working capital, but they have been rejected. So appealed and rejected again. So is there any way that they could try again? I'm not too sure which bank this person is with, but apparently previously the turnover was about 1 mil monthly, and now it's about 300 plus. Okay, so most likely seems like they're in the travel industry as well. So I'm thinking this might be due to the loan exposure of the bank, or it could, or it's with Maybank. So what can he do to solve this?
For this person, you want to private message Jeff later so that we take a look, see whether we can do anything with your properties and see whether we can provide any gear up from your property instead. It's actually cheaper than to get from your temporary bridging loan.
Okay, sure, no problem. I will tell Jeff on that. No problem. And also, another one, a quick one. What is Maybank's current view on invoice financing on commodities since the latest issues in the oil industry?
Wow. Currently, we all go through insurance schemes, so it's not so much on Maybank view. I think even the underwriter, the insurer, right? They are very skeptical in terms of writing invoice financing when it comes to commodities. So yeah, highly likely, right? The chances of getting the facilities under the normal loan insurance scheme, right, will not be high. Then it has to go to EF, so-called the trade loans, okay, which wasn't around last time, all right, to get the support from the government, because now it's 90%. But if you're new to this one, that means now you're applying for it, right? It's pretty tough because of what's happening, and especially when it's commodities involved.
Yeah, that's right. I think also, may I add on the 90% by government, even though government says that they're helping out with 90%, but like what you mentioned earlier on, there's still a list of rules and regulations that banks need to follow. And then, and there are different steps that we have to take before the government is willing to cover that 90% as well. So sometimes I think we are constrained by it as well. So I think we'll need everyone's understanding on this issue also. Yeah, that's right.
Yeah,
so
it's good
I think.
Sorry, it's good that you raised. I mean, you answered this, because a lot of businesses are coming to us and asking us why is it not being funded, financed. So I think now at least we have a clear understanding of this. Thank you.
That's right. Our hands are tied, as much as we want to help out our SMEs, definitely. I mean, we're there throughout the way, right? Humanizing financial services. But I mean, still, due to various obligations, yeah, we have to follow it. Yeah. So anyone for last question, you could even raise your hands if you want to voice out if you would rather that. Otherwise, can I hand it back to maybe Raha or Mr. Parthiban? Elina, anything else to add also yourself?
No, I'm good. I think Mr. Johnson's,
Mr. Johnson will be giving the closing remarks.
Yeah, if no questions from the ground, or if you do have any more questions that you don't want to key into the Q&A, all right, hopefully just now you have
I think we lost Elina.
taken a screenshot of his contact number. You can email so-called WhatsApp them or send a message to them. They'll be able to answer you also.
You can also write.
So with that,
you can also email to SICCI with any questions you have. We will get the feedback from Maybank and reply you as well.
Thank you all. It's now my pleasant duty to propose a vote of thanks. On behalf of SICCI, I express my sincere gratitude to Maybank and Ms. Elina Yeo and Cheryl, the chairman of SICCI, Dr. T. Chandru, the chairperson of this session, Mr. Parthiban, who's also the board of director and chairs the subcommittee on entrepreneurship in SICCI. We thank our board of directors who are present with us at this seminar. Most of all, I want to thank all of you who have spent your valuable time to be with us this afternoon. I hope you have benefited from this webinar and will help to spread the news about SICCI and attend future webinars. We have a special service to support SMEs known as the SME at SICCI. Feel free to call us at the hotline, which is 650-80147, or email us at SICCI. All the information, contact details are available at our website. We really wish you a great evening and happy weekend. Thank you.